This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's discuss what is going on the gold market. Well, before we'll start the research, I beg your pardon for this picture since there were some problems with the saving the chart in the software, so I have to save it as the workspace. But I hope that you will see the picture clear. Well, we'll start from the daily time frame as usual, and the situation is not simple on the daily time frame of the gold. As we have discussed within the previous week, as you can see, market stands in the tight range. Actually, that was the Friday, the previous of the previous week. Then market stands within this range the whole week, and during the non-farm payrolls release, it has shown the failure breakout, just clear out the lows and returns right back. So that is very curious price action. Why? Because from the one point of view, you'll see that market stands with the bull trend, but price action, as you can see, doesn't support it. This is the bearish sign. Also, market stands very close to the previous low, and gold is the kind of market that likes to grab the steps wherever it could do. So it's very rare when the gold market leaves behind some significant areas without clearing it first, and only after that shows some of the price action in one or other direction. That's why it's hard to accept and believe the fact that market really could leave this low without clearing it out first, and only after that will start the retracement to the upside. But from the other point of view, we see that was the failure breakout of this, some sort of the flag or consolidation. Market has returned right back inside of it. So that is the potentially bullish sign, and maybe if we will deal with some other market, I will have no problem to start trade this pattern as, for example, as the double bottom, because by this low market has hit significant target on the weekly time frame, and in fact from the technical point of view, market has no reasons to continue move lower and grab the stops moving below it, because it has no significant targets right below it. In fact, this target has been hit already. So if this is the double bottom, it probably could start right from this area. But that is the gold market, and on the gold market I feel uncomfortable before to take any position in the opposite direction on the retracement currently to the upside, before I'll see that market will come down and will clear the stops below significant lows, and only after that we'll start move to the upside. So the situation is not very simple. The second difficulty that stands currently on the gold market is what pattern we will trade. Will it be, as we said, double bottom? Then probably hardly will be ABCD pattern already, because this is really significant pause in the starting of the CD leg. That's not very typical for the ABCD development. Let's assume that this probably could be just two possible patterns. First of all, this is the double bottom, as we said. If market, for instance, will show another move down, grab stops below this low and returns right back, then it could be the double bottom with the significant move to the upside, or that could be the butterfly buy. So because the environment and price action inside of this coiling doesn't move in contradiction with the potential butterfly, because we know that the minimum target of the breakout is the height of the range counted to the upside if this direction will be to the upside, if the breakout will be to the upside. And this could be to the upside because we see this the failure breakout to the downside. That is very common price action classical situation. In this case, if market will show breakout to the upside, reach the minimum target of this breakout, that could be the butterfly buy pattern. And after that, market could continue move to the downside, grab the stops, form the reversal pattern, and start retracement due to the significant support area on the weekly time frame and due to the oversold on the monthly time frame. That is also very possible. So, taking into consideration this really difficult environment for trading, what we could do with the current setup. On the 4-hour time frame, we see that since market stands flat for the long term, in the previous week, you can see that weekly pivot points stand right around this consolidation, and they could give us significant assistance, because depending on how market will behave around the weekly pivot support one and weekly pivot resistance one, could tell us in what direction market could follow. Because if market will move and hold above the weekly pivot resistance one, then we'll probably to the truth breakout of this range, and at minimum we could count on the move to the 1610 area. Market will double this range of this consolidation. If market will move below and hold below the weekly pivot support one, then we could count at minimum on the challenging of the previous lows with the wash and rinse or something of that kind. Also, this could be just simple the continuation to the downside. We also can't exclude this possibility, but anyway, these levels will give us significant assistance in understanding how to deal with the potential breakout here. Don't pay attention to the trend, this is not very significant. You could see also that all the stop grabbers that has been formed have failed by this non-farm payrolls release. So now market has formed the stop grabber to the opposite direction, but probably it's better to not rely on them because this is just the major moment here is the direction of the breakout, not the trend inside of it. So on the hourly time frame, we see a very significant moment. Particularly, we see the importance of this swing to the downside. In fact, what that was. Take a look at this pattern that I have discussed in the beginning of this week, on the previous week. A, B, C bottom, with this whole ranging inside of this tight consolidation. Market hasn't quite reached the 1618 extension target. That's why I again and again talking about this feature on the markets. But take a look what has happened on Friday. Market has moved down, taken this 1618 target and returns right back. So in fact, by this section we could say that ABCD pattern has been completed right here. That's why I feel that some upward move in the beginning of the week has a bit more probability than the possibility of double bottom pattern. Now I do not have any confirmation currently. We do not see any signs from the price action yet, but taking a look at this price action, that market just complete ABCD pattern, has shown fast return right back with no intention to continue move down. This tell me that probably market has a bit more chances to show move to the 1610 and butterfly from that point of view has a bit more chances rather than a double bottom pattern. So you can see it's very difficult as usual on the gold market to trade this current situation, because market stands in fact in the consolidation on all time frames. It stands in the consolidation on the monthly chart, it stands in the consolidation on the daily time frame, on the intraday chart. So it's very difficult environment on the market currently to trade it. And personally, I think that from that standpoint, application of the stop entry orders, not the limit orders, but stop entry orders, could be reasonable. Because if you will wait when the market will show the real breakout, and later will start to take the position by the limit order, where you will place your stop, somewhere below this area of resistance. Now later it will be the support. Okay. But in this case, if market will show just move to the 1610 area, your risk reward ratio will be not very attractive. That is the first moment. The second moment, you could miss the move to the upside if this will be the starting point of the double bottom. If this will be a no wash and rinse pattern on the gold market, the market will just decide to form the double bottom and continue move further to the upside, you will miss the significant move. But applying, for instance, the stop entry order that could be placed somewhere above the monthly pivot resistance one could solve this problem. But think about it. I do not want to make it as the trading plan for you, and I don't want to oblige you to use the stop entry orders here, but think about this possibility, because traders do not use stop entry orders very often, but sometimes they could be extremely important, extremely useful, and could make the entry technique much easier than applying the limit orders to enter. The same could be done from the downside, when if you would like to possess yourself on the short side of the market within the breakout to the downside of this range. Let's see what will happen, but taking a look on the hourly time frame and on the price section with this failure breakout to the downside, well, my just feeling that the 1610 move could appear first, and later market could turn to the butterfly buy. So that's a bit this current price action looks more natural for that setup rather than the double bottom. But we'll see what will happen. Think how you will deal with this current environment, if you would deal with this at all, because this is really difficult setup on the market for trading.